Well, good evening. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening, and we're here now on Wednesday, the 20th of September, 2023. So, one of the big trifecta out of the way. The Fed, meeting come and gone. Now, tomorrow morning, we get the Bank of England. Then you're going to get the Bank of Japan. You've already had Sweden and Norway coming up. They're right in front of you as well. A lot of banks probably going to do a hold, just like the Fed did. A lot of people like to see what the Fed does, and then they move. So what the Fed did is they left the door open for one more rate hike. What they did is they acted a bit more hawkish than I think the doves wanted to see in the market. And they said, oh, we're not going to give you as many rate hikes in 2024 as you think. Now, please remember, the dot plot is an idea today as to where Fed members are. It is not a plan. It is a summary on paper, anonymous, by the way, as to what different members think and where they're at. This is all very fluid and it changes. The Fed couldn't get away from using the word today, careful, be patient. So they're looking at the lag effect. That's what that means. That's the code word for all that. And they're looking to see how things play out. When asked about the energy and how high it is, again, it's transitory to a degree. It's important. They look at it. They see what it's going to do more in the headline than it will in the core. They like the fact that leases, and there was an explanation by Mr. Powell on it, how the new leases are going to be probably less money, be it corporate homes, than a year ago. Okay, not everywhere, obviously, but they look at an overall index of it. And so that was important. So their fear, of course, and they'll go with it, is that the economy is stronger than it's been. Labor is still tight, but they're hoping, I want to use that word in quotes, that the lag effect will eventually work on this and take things down where they want. They still have a 2% goal. That's it, folks, in a nutshell. So we go back to September being, and I'm not going to get away from it, the weakest month of the year traditionally. That doesn't mean it has to be. That's what it's been. What's the weakest week of the year? Out of September's, it's traditionally this month. This week you're in. And what is the market doing? It's breaking. So you have 2 days left. You can change that for this week to prove it right or wrong. And you got another full week before we know how this month is going to end up. But so far, the market's in a negative part. So let's go look at it and see what this all means. BND, as you can see, we're coming here to rates being the highest. The lower this goes, it's an oversight that as rates go up, that's what happens. Now, you're sitting here at the 435 plus level in the 10-year notes. The Fed also says that they look very hard at the 6-month, the 1 year, and at the 2 year, but they like that 6-month, 1 year. Okay. This is still not friendly. When you and I take a look at the chart, it's lower highs, lower lows. It's still bearish. It's into the support of the last break area. You were here, then you came down here. So you can see how you're fighting right into that support. Next few days will tell us the story. But if today's high is taken out on Thursday or Friday, it would be a heck of a sign that the market doesn't want to continue breaking. Am I expecting that? No. Generally, you don't take out the high of an outside day down within the next 2 days. That doesn't mean it doesn't happen. Where's the resistance? All the way back at the 18-day average. And you'll notice, I call this so often for you the line in the sand. And as I'm redoing my course, I'm right now doing all the PowerPoints for the moving averages. That is what it is. It defines its relationship with price as to what is the bias, keyword bias, of the market. When the market is over this, the way that I teach charting, I believe the bias is up, and when it's under it, the bias is down. So if I have sell signals and the bias is down, I have a better sense of confidence in the trade. The same if I have buy signals and you're over that market. Where am I looking for potential for support? Lower Bollinger Band could be 70.41. It's only 20 cents away, but that number is going to drop. And how much will it drop could be a key. Day before, it was 70.47. The day before, 70.52. So it's probably going to drop a nickel to 6 cents, That's a guess, an educated guess, putting it back at the 70-30 level. Okay. When I take a look at momentum, it's not embedded yet. Both numbers did finish under the 20 level. You see that. The day before, both numbers were at what? They were under the 20 level. So tomorrow's a very important day. If tomorrow's another day where they close like that, then the market's locked into that embedded status. And until the red line closes over 21, for me, it's all systems go in terms of telling my subscribers, sell signals. Rivian. You can see the battleground now forming at the 18-day average of closes, momentum down. One more day down tomorrow and a lower close, taking out today's low, will seal the fate that then you have lower highs, lower lows, and you're potentially opening the door for wherever the Bollinger Band is, but it's not going to be 2082. The number's been coming up recently. If we take a look here, as you can see, 1982, 2019, so that's, let's just call it round figures, 30 cents, and here 2082, it's more than 30 cents. That's going to jump up right under the market. So I'm not convinced there's a lot of downside. You'll probably get oversold if you make a run to it. It'll be up from there. Look to see if the support shows at that point. In the United States Gasoline Fund, well, this is going the opposite way that we've all been thinking. We keep hearing that gasoline prices are going up. I saw Gunlock today, the bond king, as he's called, on CNBC, and he was talking how his price of premium in LA has gone from $5.50 to $7 now, and that's not what's going on, though, on the index. This has weakened quite a bit. If you take a look at XLF, the financial services, a big outside day down today. With the momentum down, you got to get careful here. The market closed 34.49 underneath the 18-day average. All systems went back from the way that I teach charting into another sell mode. Wouldn't be surprised if you start coming down here. First thing, though, you got to be able to do is prove you can get away from 34.51, the 18-day average of closes, but you've changed the chart pattern. In XLI and the industrial sector, none of this is friendly talk for it. Fed higher for longer. That is what the Fed said. The naysayers won't believe them. The naysayers will say, yeah, keep it going. Drop September down. We know it's a weak month. We'll start buying the market on you. They've proven right all year. I'm assuming that's what they're going to do. I don't know it, but it's certainly their type of game, and I think they'll be in there. But for this type of market, no. You've been in a downtrend. You're under the 18-week average. You're a day average, I'm sorry. You're fighting a battle at the 100, what makes it so hard on that first challenge to want to be short. I want to be, but I'm scared to be short because you often fight too big of a battle there. And if it drops any further, 102.46 to 103.20, those are the areas I'm looking for the big time support. Not bullish, but reasons for pros to come out of shorts. Disney, market doesn't seem that enamored with them wanting to send, what is it, all these billions on their theme parks. Don't know why, but the market today, up 60 cents in a market that was overall down, but not like it's on fire because of what they did. In RSP, okay, is the consumer getting so trashed they can't keep buying things? I happen to think we're getting to that point for the lower end consumer. Dollar stores not doing that well, suddenly out of favor. Student loans going to have to be paid right away. Are you looking at the delinquency on car loans? They're shooting up rather sharply. You've got to pay attention to that. Credit cards running what, 24% to 27% that you've got to pay on your debt load? How do they get beyond that? So I think that's weighing on this market right now. It's been weighing, but remember, we have that student loan payment coming in October. Don't forget it. You're ready at September 20th. I don't know the exact dates and how they work in October, but they're there. In the home builders, okay, KB didn't have that good of a number today. The market didn't lift off of it, but you're down to the 100-day average, the lower Bollinger Band. This market, every time it comes down into these type of numbers here, what has it done? It's recovered nicely from those old lows. So I don't want to join in and get super bearish. I will if you embed. You know I believe in that tool more than anything, but I haven't seen it embed yet. So oversold in a short covering area, that I do see. Then we get to the energy sector, and again, you'll read the headline, oh, energy prices, energy. They have been falling, not going up. That's the first thing. And they ended up in a short-term sell mode on the close here. Could they go lower? Yeah, they could. You negate this if you get over the highs of Tuesday. Don't, and we have some problems there. In gold, you went up right today, where I think the pros just walked away from the long side of the market. The combination of the first challenge of the Bollinger Band 100-day average, come on, why would you hang around there? It's time to be gone. In SLV, what did I tell you yesterday here? I said I think you'll go up to the right up here into the 20, I think it was 2153 yesterday. I forgot if it was 53 or 54, which was the 200-day average and the 18, and have a real problem. All it owed was that from losing the embedded reading, not here as much. Well, it actually was here, more so than in the futures. And that's what it did. And tell me that we got to 63 and we finished at 34. I feel good about that. In the copper market, okay. You went back into a sell mode today. Now on the close, you finished at 37.40. You failed. Just what we talked about here. I told you I thought that, you don't want to be buying into the 200 and the 100-day average in the Bollinger Band. That's where pros come out. And with today's action, it's the first out-and-out sell signal since this whole rally from right here began. And until you take out today's highs, you've opened up the door for the market to try to work, in my opinion, lower. Doesn't mean I'll be right. I'm wrong in my thinking if you take out today's high. In TLT, again, just like BND, why not work itself even lower? It's been bearish. It's embedded. I think the pros will do selling in this market on rally still. Dollar. None of this was bearish the dollar. I didn't hear anything bearish the dollar coming out of this. You have the embedded reading. You had an outside day up. So get nervous if today's low is taken out. First time I've said that, but it's the outside day up. You don't want to see that taken out tomorrow or Friday. That would get me very concerned. And you had your outside day down the opposite way in FXE. So what do you do with that? I'm on the bear camp of this, still thinking you can go lower, now to the 97.71 level. And I know so many people think, oh, this is the year the dollar's going to peak out. I don't care what it does during the year. I care about tomorrow, the day after, the day after, the day after. Not sitting there trying to figure out the dollar 6 months from now. I know people do that, and some do it well. I don't think I'm one of those guys. I'd rather take the market a week at a time on my weekly charts, a day at a time on my daily, and I'm still here after all these years. That's the way to look at it. All righty, my friends. What else? You know, as I said, you want to keep up with how this is all going to impact the markets now. I'm mentioning this on futures for a reason. BND, TLT, USO, everything you're watching in energies, the interest rates, SPY, DIA, they all come from the futures market. They're all based on the futures prices. So why not get this information and see what we're telling you? We talk cash markets, we talk the option strategies, the spread markets, chart patterns, ideas longer term where the charts are headed for the futures, ties right in. How do you get this information? We publish it all day long. You can get a free sampling of it, no obligation on your part, by going to our website at iraepstein.com. Free offers, or move your cursor right up here, give it a click, and away you go. I'm Ira. See you tomorrow. You have a great evening.